Hello, everyone, and welcome to today's Stocks and Crypto TA live stream with me, No FOMO Charts. It is Sunday, July 16, 2023, just about 6:30 p.m. Eastern Standard Time. Earnings season is underway here in the USA. Financial stocks are reporting their earnings. We also have the beginning of a few tech stocks such as Netflix, IBM, continuation of finance, Bank of America, Charles Schwab, Morgan Stanley, Goldman Sachs. And then we have some big names, Netflix and Tesla, United Airlines, American Airlines, Johnson & Johnson, some credit cards, American Express, Capital One, etc. This week, I should say, for the economic data releases, we have G20 meetings. Manufacturing index, this is going to be a big one. Retail sales, core retail sales, industrial production and building permits, unemployment claims, manufacturing index, and existing home sales. So we're going to see that narrative in the stock news this week. In addition to news, we are officially in USA stock market's earnings season. Last week, we saw the June CPI and PPI inflation data continuing the downtrend. So that's just those two data points. It's not including the PCE inflation data that the FOMC really needs to see go down more. However, consumer sentiment is up. And I can attest to that just anecdotally when you walk around outside. It is hot here in America, weather, but people are generally happier here in the summer compared to 1 or 2 years ago, I would say. Also, we have positive earnings data from JP Morgan, Wells Fargo, Delta Airlines, and PepsiCo as well. Looking forward, we have the USA FOMC interest rate meeting next week. It's next Wednesday, July 26th. The FTC did approve Microsoft's acquisition of Activision Blizzard. And UPS, the delivery workers are preparing to strike as their contract negotiations stall. So they're warning that deliveries might be stalled, delayed. On the crypto side, pretty big news. A judge ruled in favor of Ripple XRP crypto in an SEC court case, which is good. Ripple pumped, as well as XLM and some other altcoins. A very nice week last week. BlackRock Bitcoin ETF application. This is the second application after they amended the monitoring section of their application. That's going to be officially reviewed and commented on by the SEC coming up in the next 2, 3, 4 weeks. Many altcoins did rally after that Ripple win, partial win in the SEC court case. And Litecoin's halving date is coming up soon in about 16 days. August 2nd, and Bitcoin's next halving date is estimated next April 2024. So we do have quite a bit of moving parts here in the stocks and crypto world. I do want to point out, though, as we move to the charts, that we've already been rallying. This is the S&P 500. We're in stocks right now first. S&P 500 chart. We've already been in an uptrend for half a year, okay, 6 months. So even though we're having great or good positive earnings data on stocks, we're already up so high, okay, that it's going to take some incredible positive stock earnings data to get a blowout top and explode to the upside, okay? Because if I only look at the chart and just for a moment I ignore the earnings, well, I'm already starting to see a little bit of bearish momentum forming in the momentum oscillators on the daily. The weekly, we're starting to see a little bit of hesitation right here on the MACD histogram, which could take several weeks to form. But like I said last week, this is our previous two support levels, 4283 and 4177. If we pull back on a weekly, which is totally normal, high, low, high, low, high, where's the next low going to be? It could be 6 to 7% down lower. Historically, if we rewind, sometimes, for instance, in the pandemic, we had these pullbacks, but it was just a large pullback of about 8%, 8%, 6%. That's what I'm saying. The 7% is about that average of a major pullback. And then it continues to the upside. See, down, up, like that, upstairs pattern. So I'm just saying, for my analysis, eventually we might get some kind of pullback, or we might get a blow off top, island gap up, and then pull back after that. But I'm not seeing any shooting star or bearish engulfing or inside bar or anything yet. Although this is kind of a little channel here on the price action. So just something to watch out for, and we will see the price. If we have a major problem in the price, we'll see the actual candles reverse to the downside, right? If we see right now, it's still pointing up. There is that bearish momentum. You can see it here on the H4 chart as well. But for that to really confirm, we need the lower high and the lower low. That has not happened yet. It could happen this earnings cycle. So I'm just in the back of my mind, that's why traders always need a stop loss. And for me, why you don't hear me talk so much about trading is I'm already invested in this way earlier. So I don't need to chase any of this. This is all profits for me, right? Or for a trader who got in earlier here on these lows, support low, support buy low, support buy low. Maybe a breakout buy if somebody's really aggressive right there. And then the rest of this just profits. So trailing stop loss or one final stop loss somewhere up here makes sense. Let's move on. QQQ, NASDAQ. Same deal, very similar chart, except we're already in the overbought range here. There is momentum here building again on this MACD histogram, so I'm not surprised if we'll get another leg up because we can see the higher target here. Here's our resistance 1, 2. We haven't hit this white line, this third one. We've hit the right yellow dotted rising wedge. And again, there is that short-term bearish momentum forming on the price action. And it's starting to decline just a little bit on the MACD histogram. We are in the overbought range on the RSI. But can it always go higher? Yes. What does it need to take to go higher? It needs buyers and positive news catalysts, positive earnings releases and events, and activity in these corporations that are reporting earnings. Now, the big level we need to break out above is 402. 402 on the QQQ. We haven't reached there yet, but this is starting to look like a little bit of a FOMO rally, looking a little bit like FOMO rally. Okay, because we have not had, it's hard to see, but in the white price and the line, we haven't had a pullback down yet. We had a healthy one back in March, a little bit in April. We have not had one for about 3 months. That's why some traders are saying, well, at some point, it might sell off a little bit. Thank you for the follow. Appreciate that support. All right, so clearly in the H4 as a swing trader, we're still in the up cross, so it's uptrending. It's just hit that relative overbought range. It does not mean it's going to crash. It could pull back to support maybe about 369 or 372. Moving on, Dow Jones. Dow Jones on the daily. So finally, Dow Jones, we're starting to see signs of potentially a breakout. We did have that very short term, the day traders, trying to clean this chart up so you can see. We had that very temporary double top back down to support, and this would have been a relative oversold level, say on H1, see that 15-minute H1, relative oversold. That's why the traders are re-entering there if you're a day trader, swing trader, and playing this leg up. If someone's leveraged, if you're not leveraged, but somebody's using a double or triple ETF, anywhere from 2% to 6% on this one little leg up for a swing trader. But for me, my style is I try to buy as low as possible. So, for education, it would be this support, this support, this support. Why? Because it's a real support level. And then we had upside down head and shoulders with the back test. So the larger price pattern is playing out. Finally, had to wait for it. But if this is true, and a lot of people I've been hearing on the internet, this could just be news manipulation, but you're hearing a lot of talk about industrial companies and about building going to start up again. It makes sense because the pandemic emergency is over. We clearly having infrastructure problems, or there's some kind of strange problems happening in the industrial sectors because there's a lot of basically disasters happening, but at the same time, the actual building side, starting to hear news of that, try to pick up. So the target on the upside is 369. If this upside down head and shoulders is actually real, or we could just measure it and think of it as the parallel channel. So 4 to 8% is the top side target. Still in the uptrend. Was a little bit hesitant, but still in the uptrend, and it's not even in the overbought area yet. So Dow Jones, the resistance up here is 353. There's a lot of lines here, but 353. And again, learning in history, everything I've learned is if I want to get the best deal in the stock market for these ETFs, got to buy as low as possible. Where was their maximum fear? May and September. I lived through that, even on the stream and as a trader as well. Those are great times to buy. The next one was March. But, you know, Dow Jones kind of hesitating. It hasn't moved for a while. Okay, wrapping up the stock section for the next 5 minutes or so. Let's just go ahead and look at, we'll just take a quick lightning round at gold. It bounced off that 200 EMA and see if it can maintain a higher high. Actually, if we zoom in here, remember last time I was saying there's a potential upside down head and shoulders on this price. Looks like it came true. We got the gap up to almost 2%, but we do have a little bit of an evening star pattern here, so just watch out for that. But if this is a trend change, what should happen here on gold is high, low, high, higher, low, and then up. Because we broke out of this dotted trendline resistance. That's textbook play. Textbook. Silver is a smaller ETF, so that's why this one went up higher, upside down head and shoulders, stair step pattern up 3.53%. We double that target, so the bots and the algos know to take their profit or move their stop loss right at about 2250. They know that. So silver, see if silver can make its uptrend reversal, and if it's going to pull back, that's fine, but let's see if it can maintain a longer uptrend. US oil rallied, had a nice rally. And this is what I'm talking about. Remember, I was talking about last time, about a couple weeks ago, saying, well, we've held the support 5 times down here. And if this turns into an upside down or a double bottom right here, upside down head and shoulders, bullish continuation, back test the resistance. And then my target was up here about 69.75. Almost hit it perfectly. So technical analysis, sometimes it works on these oil and natural gas, but this one was a play of if somebody's seeing this momentum and you have a huge green candle and it's bullish engulfing, somebody could take that trade. What's the stop loss there? It was 2% and this 8%. There's a 4-to-1 play. It's beautiful. Natural gas, on the other hand, I exited natural gas somewhere in this area early July, so I'm out of there. And like I said, unless there's some catalyst or something like that for these gas and energy ETFs, it doesn't really respond to technicals perfectly. So until natural gas shows me more evidence that it's going to go in an uptrend and not just bounce around here and consolidate, it needs to get a severe new uptrend to prove itself to the market. What does that mean? It needs to not go below $6 ever again if it wants to maintain an uptrend. We are in the summer heat here in America, so we'll see what's going to happen with the supply and demand. All right, just a couple more minutes here. Because it's a big week with earnings, we have to at least take a look at some of the big names this week. Now, Netflix. Okay. So apparently there is a strike in Hollywood land with the writers and the actors there. So that might have some kind of effect on Netflix long term, but indirectly. But directly with the corporate earnings this week, it's going to be all about profits, probably margin, subscriber count, the subscription tier fees, the trends, etc., new content, the slate that's coming out for the next year or two, trends, etc., reassurance for investors, etc. Because Netflix was one of our leaders in an uptrend, okay, bottomed out way earlier than other stocks did and rallied and recovered. Where are we now? Right at this resistance point. It is in an uptrend. We see this. The golden cross is in an uptrend. It's going up. But hitting this temporary triple top and losing a little bit of momentum. So in the weekly, it is on the overbought range. It doesn't mean game over for this stock, that it's going to crash to zero. It's just, as an investor or a trader, I want to buy low price and sell highest price I can. So the RSI can help a little bit just to make sure I'm not going to buy that top of the market on accident. Some people do that. So that's why I just stick to my tools. I ignore most of the news except for earnings and investor reports. So targets for Netflix is sometimes we might pull back down. If it's bad, the 50 EMA is negative 10% here. It's happened before. They've even had negative 20% crashes over time after the bad earnings, right? You could see if we have a bad set of earnings, negative 20% over time, that could take 2 months. Positive earnings, the inverse is true. But we're already here at this triple top hesitation. So, it would be better if earnings happen here on a higher low. So if it's positive, we have plenty of room to go up. The problem with a lot of stocks right now is we're already up so high. Think of it like Jenga, the board game, or if you throw a ball up, at some point gravity is going to stop it and it's going to come down a little bit before it bounces again. So same deal here. There's plenty of room for Netflix to fall if it has bad earnings. So watch out for that. Tesla kind of got a little bit ahead of itself, but there was a measured move here of about 30%, and we hit that. The big move about 67%. So we still almost hit that, the average about 40% there. The golden cross is starting. Tesla, a little bit of bearish divergence momentum that was in early July. But now it's all going to be about profits and deliveries, and if anything substantial is going to change with the company or Elon Musk himself. So when I look at this chart, do I see a screaming sell sign? No, not yet. But the fact that we have weekly gaps up with a hanging man candle, that's yellow light for me. That's yellow, and that's enough yellow light for me, because it's similar to here in April where we had that gap up, and then if we can't recover, if the price is too high, then you'll know we have some kind of problem in my downtrend. Back down to support, maybe 213 if it's negative earnings or something like that. Somewhere down here, 217, high, low, high, boom, and then maybe try to make a higher high, as Tesla is one of the most favored companies right now. Lightning round, Bank of America still in this kind of almost an ascending triangle, not quite. Not quite. If I box it in correctly, it's more of a symmetrical triangle if we use the closes. So just like, I would say, just like Tesla, if this stock starts to break out above earnings, because the big bank, I know Bank of America has had some kind of like minor fraud problems with the accounts and reporting, but setting that aside, if they have good profit and earnings, the breakout spot is $30, and if it continues very high, you could get 7%, which is very large for a big, billion-dollar type of company. And bring up my list for a second. One moment. It's going to be bright. All right, let's just take a quick look at Schwab. Schwab is similar. It's riding that EMA up right now, but it's not quite in the same pattern. Not quite the same pattern. So it needs to hold that support at $57. The support, if it falls down, is about 55. It needs to break out above 60. Next target 63. United Airlines. See, this is a different story. Different story. Because these airlines, people have been traveling all over the place because the pandemic or emergency order was rescinded by American government in May and by other countries earlier. Is the price at resistance or support? It's very simple. Resistance or support. We're at resistance right now. This is the third major time we're at this resistance. Support levels are down here. Support, support, support. So if you had to ask me where would I buy no FOMO charts? Right here. Right here at the bottom, triple bottom, I'm aggressive. $42. If somebody wants to wait for this little rectangle breakout back test, $45. Enter there. Then somebody would already be in profit. And then you could just set a stop loss or trailing stop loss and follow it up. And if it has bad earnings, you're stopped out into profit. Last one, American Airlines. This is a great chart to study because so many support levels off this bottom trend line. You have the breakout as well. So there's 1, 2, 3 spots to enter. I would not enter here tomorrow. I would not do that as a long because the risk is too high. The risk to reward ratio looks like that. That's not good. That's not good. My stop loss somewhere right here. That's not good. I want the stop loss to be way under so I don't even need it. And then somebody would be up 38% on one trade on a partial amount of their account. So where's the support? Any of these EMAs here, 1761, 1633, maybe 1521 if it's bad. But, one pullback is not the end of this stock. You can see here in this blue circle, if it starts downtrending low, high, then we're in trouble. Shorts will attack. Hasn't happened yet. It's literally like April 2022. So we're watching that very closely. Okay, past the halfway mark. Thank you everyone for watching, following, supporting. We're moving on to the crypto. If you have requests, just let me know. But moving on to the crypto section. TOTAL. So total, let's start over here. Still in the uptrend for only 6 months. I'm talking about here. How do I know? We're making a series of higher highs, higher lows in the price. Now, the most recent short-term price action of just this month in July is more of a consolidation, a tightening. Okay, so it's tightening into a type of triangle here. Possibly an ascending triangle. If this is true, the measured move should be 50% to the upside, 54%. Taking me back to my $2 trillion target up here. However, if there's bad news, the support level, you can see this bottom line is right here about the 1.08, maybe even the 1 trillion. So we'll know we'll have a problem in crypto land on the price alone if the price closes below here and stays below here. It could maybe talk about 3 scenarios. Pulls back, we double bottom, and then continue to the upside because buyers want that discount. Scenario 2 is consolidates and tightens all the way into August and September until the IMF releases their crypto regulations paper in September, reportedly. However, if we have a true ascending triangle breakout, this price, the whole crypto market should blast up, backtest, and then continue to the upside. And hopefully we'll hit this top side target of the resistance, okay? This is how you know we want a Netflix style kind of chart. We had such a bad crash. Remember Netflix? I'll just show you. Netflix, we had such a bad crash. Okay, that's like crypto. We're right here in crypto land. We're right here. We needed to keep uptrending. And it's gonna, if it comes down, that's totally okay. that's fine. It needs to hit the support, but then bounce back up. That's how we know crypto is going to have a healthy uptrend for the rest of this year. On the weekly, do I see any major red flags? I see a yellow light. This is a shooting star, at least last week. That's not very assuring. Okay, we need bullish engulfing candles. How do we know? What does that even look like? Case study here, July 2021. We need to see this. We need to see this bullish engulfing candles happen now, this year. Or we need to see 2020. Let the uptrend begin once the news catalysts come through. And what am I saying is we need positive news catalysts from the government, USA government, SEC, corporations, Wall Street institutions, crypto exchanges, people making money, people having disposable income to invest into crypto and stocks and anything they want. That's what we need. The Ripple court case is a step in the right direction. The two big questions that nobody even talks about anymore is what happened to Coinbase and what happened to Binance with the SEC lawsuit. It's really quiet right now. So right now, crypto is correlated with the stock market to some degree because we have we have good days in the market. We rally up. We have a bad day. We pull back or go sideways. So, if the entire stock market crashes, we might see a pullback in crypto. The only thing that can blast us off to the upside, really, we need those SEC lawsuit to resolve itself, hopefully in favor of crypto exchanges at least. Now, the only good price pattern that I kind of like here is potentially this longer term upside down head and shoulders. And it's right at the neckline if somebody wants. Let me draw a real line here, the real neckline. That's what we're testing. We are literally testing this second yellow line. And once we break out of that, we might see some FOMO. It's now a pink line, so you can see. We backtested that multiple times. The measured move still about that 50%. Okay, so that's what I'm looking at in the market as an investor. Not even overbought range. We're okay. Still in the 4-hour up cross. Remember several weeks ago when we were here on the H4 saying this could be, we're golden up cross, that's good, it's going to fade or consolidate and hopefully we'll end up higher. We still ended up higher. Day traders played this leg, the long and the short bots, that's what they do. But for me, what I really want to watch out for is I do not want the price to do this. Because then if we lose another golden up cross, it's just the market keeps changing its mind based upon the current information, right? If somebody wants to enter into the next for a long, educational wise, support plays, oversold plays, those are probably the two safest. We don't want to buy at a resistance and say Bitcoin's and point to the sky and say Bitcoin's going to 100,000 just because I said so. Market does not really even know that, right? The market is an algorithm. It's not alive. So we want to see that humans are interacting within the computer system algorithms of the market makers. So support is the play. Is this a head and shoulders? I don't really think so. Because it's not at the top of a move. It's just riding between support and resistance. Now, fast forward to Bitcoin futures. Bitcoin futures, it's already ready to go from last time. What am I seeing here? A golden cross. That's why there's a huge arrow. You have a golden cross, and I call this like a super golden cross. You have the 100 over the 200 EMA, or like a silver. Some people call it silver golden cross. But all I need is a golden cross. We did have that temporary head and shoulders here, pull back right to support, saying we need to bounce off the 200 EMA, and then we had the Ripple court case win. It's good. That is good. So, are there still problems in Bitcoin? Yes, there are from the SEC and government. But what is the price action telling me? It's telling me that the human traders and some big money, at least like Wall Street, are saying we're in this new uptrend of Bitcoin. It's just a matter of time. Okay? A matter of time to see, can this price resume its uptrend, how high can we go? Because last time we had a golden up cross was right at the start of the pandemic, and the charts are eerily looking similar. It's just the price difference is there's a much larger gap in price. Right back here is $9,000 Bitcoin, relatively affordable, okay, and fractional buy. Right now we're at $30,000 Bitcoin. That's kind of expensive, right? Because even if Bitcoin goes 100%, it's still only $60,000. Now, again, because Bitcoin does not have any splits or anything, coin splits like that, Bitcoin to me mentally should be 10 to 1 or 100 to 1 smaller. So Bitcoin should only be $300 or $30 or $3, right? So this big number doesn't scare me that much because the float is only about 17 million coins supply. So to summarize, Bitcoin is still in the uptrend right now. We do have a positive golden cross. Where's my support? On the bottom. Where's my resistance? On the top. All right, rising wedge pattern. We're in an uptrend, but in a relative resistance zone right here near this temporary yellow ceiling. So even if we fall back down to 27,620 or $26,000 Bitcoin, that would be a yellow light for me. Okay. If it goes up, down, up, down, up, down, up, down one more time to 28, okay, bulls need to buy there, and then break out above 30. We will know when we're in a very strong uptrend if it's nonstop every week. It's 30,000, 35,000, 40,000, 45,000. That's healthy uptrend. That's more crypto style. That's what we want to see. So for me, I already have my crypto investing portfolio, and every week is basically profits for me. So that's why I don't need to do scalp or leverage trading as an investor mindset. Now the only problem that I'm seeing on the weekly is these 3 weeks of going sideways. That's just not good. Okay, that's just not good. There's hesitation here. There's problems in the market. 3 shooting stars in a row and then 1 gap down in 1 attempt. That's not good. I want to see a hammer candle, bullish engulfing candle, hammer and bullish engulfing or morning star. I want to see that. We're not seeing that right now. This is actually not good. The risk is actually a little bit favoring the short-term bears right now because the SEC case, Binance, what happened in Europe as well with Binance. So if we happen to have this gap down, hopefully it's not this severe, but a little bit of a pullback, I will not be surprised if Bitcoin pulls back to 27K or below that. And then we have to try to buy that. All right. Hopefully this is not a dead cat bounce. Worst case scenario, it's a dead cat bounce. For Bitcoin, it's a double top. And we can actually measure that to the downside. And that would be 18% negative, which would be 21,000. That's not my preferred scenario, but that's actually kind of okay because we're still above these previous higher lows. We kind of don't want to go below 26,000 in recent price action, however. Hopefully that makes sense to people. And I over-explain on purpose because some people, they look at the charts and they make up a story in their mind. But for me, we need to look at the price is the truth with the current information that we have. So Ethereum, moving on. Ethereum, we're going to end soon. Ethereum in the golden cross on the daily. This is good. This is good. Multiple support trend lines on the bottom side. Trend lines on the top side. We can tighten this up. Now, the last support level we had on Ethereum was about 1630 back here on June, middle of June. So I want to see this thing. It is looking like a little upside down head and shoulders. All coins got a little bit of a nice happy boost from XRP. So my target is 2,146 here on Ethereum. What's the risk reward just to make sure we're keeping that in here? Minimum 5% to downside to try to hit that 10% on the upside. Maybe even a little bit bigger than that to keep that 2-to-1 play. Is it the best spot to buy? No, it's not. Because there would have been better spots back here, but that's in the past now. So if someone's going to try to get in here on education, You know, at some point before, if it happens to blast off, we just got to get in the market. If it pulls back, then closely watch that and maybe buy that bounce right here as educational, like for like paper trading if you want to practice, for example. Now, weekly, what am I seeing here? Still the hesitation, going sideways, just barely signs of life from last week. But high, low, high, low, high, high, low. We had that morning star. So if the weekly morning star is real, we should be able to really pierce through here to the next resistance zone, which is about 2,500 long term. There is a little bit of small MACD histogram momentum here. And again, Ethereum is nowhere near its overbought on the weekly like NASDAQ is. See that? RSI is just 56. So we're going to have to wait. Now, Binance Coin. Binance Coin in a very different scenario. So Binance has a lawsuit. I treat this coin very differently because I know that. So Binance Coin, it's in a larger descending triangle formation after the lawsuit crash. This is starting to look a little bit like the silver chart. Remember that from earlier on the stream? Starting to go sideways in that triple bottom pattern. If it starts to higher low and Binance has some good news, then this could easily reverse back to about 281 or 273. Any of these purple resistance targets on the top, because the measure move of the rectangle about 10%, which would be 281 target. Now, if it's going to have a bad news problem, you could see this circle right here on the chart of about 233, plenty of room to go down. So shorts have, the day trading shorts have opportunities here because they know Binance is in a little bit of a trouble zone. Now, let's talk about XRP. XRP. All right. So there's two ways to think about this, okay? And I am no FOMO chart, so I have to talk about FOMO a little bit. How does somebody avoid FOMO in trading or investing? There's probably 5 or 10 factors. I'll just touch upon maybe 1 or 2 of them. So number 1 is risk management, meaning risk to reward ratio. So let's say before the XRP pump, because nobody really knew that news unless you're an insider, okay? So you can assume it, right? But at the same time is at the chart, let me pull up a cleaner chart. Just take off all the indicators. We don't need indicators to learn about this. Is if I look at this past year's price action, okay, and I use technical analysis to say, wait a second, there is a resistance here and there is a support looking like that. It's an ascending triangle going up. So therefore, if you know your technical analysis, automatically you know where to buy. You do not buy here. You don't buy this at the top. As a long, you short that. You short that. But as a long, you buy the bottoms. You buy the bottoms. You buy the support levels, which you have to draw for yourself as a trader and identify it. And you say, this is support. Support. All of this is support. 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 Okay? If you're a short, you wait for bad news, or you short the resistance. You short the tops. So using the risk to reward ratio indicator from TradingView, my favorite tool of all time, is something like this, okay? Or here. So there's 1 trade or investment there, number 2, number 3, number 4. Now, if you're a short, it's the opposite. You buy high, or excuse me, you sell high and you buy low. It's the opposite. So you short that thing down to a reasonable target and short it down. There's only 2 short opportunities, right? So once you understand that too, if you just look at this, there's maybe 3 short opportunities up here, maybe 4. But there are more long-term here. 1, 2, 3, 4, 5, 6, 7, 8. Way more long opportunities. So you know something's happening just on that alone. Now, you can ask me, okay, how does somebody catch this large candle and avoid FOMO? Well, that's why my style is put on risk earlier. What I've learned in the crypto market is I just don't chase almost anything anymore. I see something pump 100%, doesn't matter to me. Does not matter. I feel nothing when that happens. I just say, oh, it has a pump. There must have been a setup before that. I don't start chasing it. As a swing trader investor, I trained myself over 5 years to do that. Okay. So you want to buy the support. There was an upside down head and shoulder here. That's a long buy. There's a trend line breakout. That could also be a long buy. There's a support level, long buy. There's a news breakout. That's a buy. Okay. But trying to see, if you're a day trader, that's where some of the problem can occur. If you're on a 5-minute or a 15-minute, we have to go 5-minute, okay? Because there's so much price action, or even 2-minute, so much price action, right? This happened instantly, okay? 826, this is probably too fast for humans to buy. Either somebody bought this on the level 2, like millions of dollars at one time, market buy, or a short algorithm was stopped out of here, and then they shorted out they stopped out their position. But either way, right? This is a textbook crypto play. When it goes up and the first pullback, you buy that. Right? As a day trader, no fear, just buy it. Well, I mean, it's not just about feelings or fear, but you have to just understand that's the play. And 5%, you sell at a 10 or 20% target. You happen to go 60 something more percent from that. But my style is, I don't day trade anymore. So my style is I get in as early as possible, identify a setup just somewhere. It is golden crossed. I remember saying last stream is if it hits this support, the target could be somewhere here in 75 cents. And what price are we at today? Exactly 75 cents. So sometimes the TA works. It's just the technical analysis works. It's a matter about the timing, the risk management. And sometimes when there's fear in the market, that's sometimes the best time to buy. Right? So I'm not going to explain all the ways to avoid FOMO. We're going to go too long, but I touched on the two. To summarize, it's risk-reward ratio and risk management first, and then using technical analysis to identify trade setups or investment setups, either on the long or short side, long or short, and then you just leave it. Meaning, leave what? You leave the trade setup. So let's say rewind it back to July 4th. After holiday, I'm seeing, a triple bottom here. Maybe I might long XRP. So then where's my entry? 47 cents, let's say. 47 cents, my entry. Where's my stop loss going to be? I see a previous level here at 44 and 41. So then I'm going to put my stop loss below that. So it's a large stop loss for swing trades, 13% negative to the downside on one single trade. That's my exit in the red. Okay, so my entry is in the yellow. This is the colors I actually use. And then, so I need at least 2-to-1 risk to reward ratio. So my first profit target could be 24 cents. But since I measured this ascending triangle from last time, saying it could go 58% from the breakout spot, right? I know the target should be up here, 75, 76 cents, if the technical analysis starts to actually work, right? So this pump is not random. It is because Ripple partially won the SEC court case. So crypto is all news-based for now because it's the government versus crypto corporations. So I need to have one eye and one ear open to the crypto news. My other eye and ear, so to speak, is on stocks. And both eyes and ears and my whole body and is focused on my stock and crypto portfolios myself. But having those senses open and just being open to the news. Okay. So then, if somebody's already in this position, let's say somebody bought, 6 months ago, 3 months ago, then you're already in profit and just manage the stop loss. But for me, I'm trying to hold on as long as possible in my trades and portfolio because yes, we have the SEC problem, but if this is a new uptrend, this could be the beginning of a new uptrend, not the end. Hopefully. All right. So thank you so much, everybody, for watching. Went over like 15 minutes. And I hope you learned something from the stream. If you like this stream, if you learned something, go ahead and click that follow button or subscribe on TradingView, YouTube, Twitch, and Twitter as well. And before I sign off, we actually have a very good question. Okay. From Hassam on YouTube. Hi, thanks for creating this channel and thanks for you. Thank you. For you as well, following and supporting. I have a question about the risk-reward ratio. How can I calculate the lot size to get the correct information things? Okay, so there are certain websites for that. It depends. Now, when you say lot size, it kind of reminds me of, you might be doing Forex. It's different. It's different for each. If you're doing crypto, you just kind of have to manually calculate it yourself. There might be crypto calculators out there, but because crypto is so fractional, especially like Shiba Inu is like 0.000 something, so you just have to kind of calculate it for yourself. But if you're using stocks, there are a position size calculator out there. Or for crypto, yes, we could still use this, right? Let's use XRP as an example. So now, so risk to reward ratio and position size calculator or calculation. This might take like a little bit of time. So let's say somebody has $10,000 total account size. All right, so 10% or $10,000 total account size. Now, for beginners, if you look online anywhere, Google, TradingView, YouTube, you'll probably come across the 1% trading rule, which means only risk 1% of your total account size per trade. So then this is where we just you don't even have to do it mentally. You bring out a calculator and say, okay, what's 1% of $10,000, someone's total account size, times 0.01, that's 1%. So then it's $100 minimum risk. Okay? For beginners, right? I'm just saying, because if somebody risks 100% of their account all the time and they're wrong too many times, they lose all their money. That's why people go bankrupt and traders blow up their account, lose all their money in 90 days. So to prevent that, that's why the 1% trading rule was invented. So now if you see this, XRP, let's pretend it's not 75 cents. Rewind it back to, where was it here? Let's use a whole round number. Right here, XRP was 40 cents. 40 cents. Let me draw that. Okay, it was 0.40 cents. Right there. Okay, so then you bring out the calculator. And hopefully I do this right the first time, but right, you have $10,000, right? So then the position size. Now, when I bet the question you're asking is, when you start using the risk to reward ratio, how then do you figure this out, right? Like how much do you figure out the size? Okay, one way you could try to do it is you could actually put your account size in here, right, and the entry price. So you could actually type the numbers in here. This could help you as well. But let's say, yes, exactly. So okay, I know what you're saying. Now, let's say, remember, the 1% risk of a $10,000 account is $100. Okay, so then 10%. Let's say if I have I'm just making a random number right now for stop loss, 10% stop loss. So then 10% of what equals $100? It's $1,000. Does that make sense? This is just one way, like an easy way you can figure it out. Okay, there are other calculators out there, but this is just the way I do it, just manual style. It doesn't have to be complicated, because $1,000 times 10% is your $100. And remember, the $100 is the 1% trading rule. So then you take $1,000 In your crypto exchange, it'll automatically say the lot size for you. But then you take this and then you multiply it by the 40 cents, and you're gonna buy 400 lot. You're gonna buy 400 XRP for this one trade example. And then you just managed your risk. It's relatively small risk, 1%, but then you just protected yourself in case it crashes on you. Okay. So I don't have the level 2 open of a crypto exchange on my crypto exchange right now, but you can do it like that. It'll say how much do you want to buy in dollars, at least on Binance it does that. So then you type in, okay, once you calculate, you say I want to buy $1,000 of XRP, which on this 40 cents example is 400 XRP coins. And then you set up your stop loss, and then it should mathematically, if you're swing trading and investing, you have time to calculate it and like double check it before, during, and after, just to make sure, you're not like 10 times or too big or too small. And that's how you do it. On stocks, there's calculators out there. There's Forex calculators out there. Leverage, it becomes harder, but this is the easiest way I can explain it to somebody. An even easier way to explain it is if you don't want to calculate percentages or something like that, which I do recommend that. But all you need to know is, your risk size of $100, maximum risk per trade starting out as beginner, then you always know you want your stop loss whenever it hits, you're only going to lose about $100 when you're a trader. As a trader. So then you could do it like that. When I'm day trading, I don't have time to calculate. So I just know, oh, what's my risk on this trade? I calculate my position size before I start my day on day trading. So I'll have to think about is entry, stop loss, and exit. I don't have to calculate anything while I'm trading. But this is basically, you have to calculate the dollar loss or the percentage loss. I would recommend knowing the dollar loss because that's what we're actually risking in the market. We're risking dollars or your currency. So I hope that makes sense to you. The exchanges are designed to kind of help a little bit with that because in your crypto exchange, there's a line for US dollar amount, or you can type in the lot size, which you're asking. And then you just kind of have to double check on your own. You have to make your own stop loss and then double check before you enter the trade about how much money am I actually risking. That is the number one key for trading. Is before you even click buy or sell, before you enter the trade, you know exactly, basically, how much money you are risking on your stop loss. You know exactly what your entry is, exactly what the stop loss is, and how much you're going to lose on that trade. And then exactly what your profit target is on the top. The two here, the colors got flipped. But the best way to practice that instead of doing it in the market is that's why I absolutely love paper trading in TradingView. This is the number one way to practice because you open up the order panel and then you have to do all of that, what I just said here. If you do it correctly, right? You want to buy, let's say you want to buy here, right? And then you have to set the price and you set the take profit targets, at least one of them on the top, the stop loss on the bottom, and you have to calculate it all. So as a beginner trader, that's what everyone starts off with basically, right? You could see even here, there's dollar risk and there's percentage risk. So I would highly recommend for you for crypto, you could pick any USD crypto, BTC USD, ETH USD, XRP USD, and just practice here over and over again, because that's a skill. Without that skill, traders will lose all their money. Without risk management over time, there's going to be certain trades in somebody's career that are just really bad trades. And if it's not, the risk is not managed, only a few trades can totally destroy a trader's account. It's happened to other people, right? It's even happened to myself a long time ago, right? When I first started, when I was a beginner. Where's the risk management, right? Now that's not as much a problem for me because I practiced this for, 4 to 5 years straight. So It's pretty much always a part of my process, always, for swing trading investing. And why am I, and I'm not just pointing out the person who has to answer this question right now. I'm talking to everybody who's going to watch this in the future. Any professional will tell you risk management is the key. And then for trading. Now, if you're an analyst, then it's all about your chart skills, right? Because you have to realize, whenever I come on stream, I am in analyst mode. I'm in technical analysis mode. So I'm all about charting. But when I'm working through the week, I'm actually not charting as much, or I chart some. But then if I take a trade or investment, I turn into trader investor mode and I start thinking about this. Entry, stop loss, profit targets. This is like the step 2 and 3. Okay, thank you so much, everybody. That's a 15-minute long explanation about risk reward and entry, stop loss, profit targets, risk management, and how to do that after somebody gets the technical trade setups. So again, thank you so much, everybody, for watching, following. Would appreciate your support on any of the channels that I'm on. And hope you have a good week. And I will see you all next week, most likely Sunday the 23rd or Monday the 24th. Okay, happy trading. Thank you, and bye-bye.